I think most from the cattle side, I think the big story really all comes down to inventory. And so hopefully most of what how I talk about most things through here will focus on that inventory aspect. And the second bullet point there, there's been little to no heifer retention due to drought. And that drought, we experienced some of that drought ourselves this past late summer and fall. So anybody that had calves or had some heifers that they thought they might have retained even locally, it would have been very difficult to retain those animals just because of how dry we were. The inability to stockpile fescue, the inability to have a fall cutting of hay or whatever it was. And so we'll get into the cattle inventory report at some point, but that, it's been really difficult to expand a cattle herd locally as well as in what I would consider cattle country in the Great Plains, where Aaron showed the drought monitor, and there's still drought in considerable portions of cattle country. There are some opportunities to make some money as stocker operators, and in reality, feedlots are not just making a whole lot of money on cattle that are coming off of feed right now. Just quickly look at slaughter steer prices. Last year was a really, really good year for slaughter cattle prices relative to where we'd been historically. The previous historic high was been back in coronavirus at like 171, 172, something like that. And we spent the biggest part of last year higher than that peak price. Last week we traded around 183 to 184 on finished cattle on a live weight basis. The deal with that is a lot of those cattle that have been coming off of feed the past couple of months, even if you're getting 175 to 185, the problem is a lot of those cattle, you take an 8 weight that was bringing 250 in August or September, and that's $2,000 of expense on buying that animal. When you're selling a 1,400 pound animal at $1.80 a pound, there's really not much profit in those animals. By the time you figure putting on 600 pounds, and the cost of gain has been close to $1.20 or so. So by the time that animal gets to 1,400 pounds, just the purchase price of it and the feed cost part of it, you've got over $2,700 in that animal. So the cattle that are coming off of feed right now have not been the most profitable cattle. I'm not saying that some people aren't making some money, but they just haven't been the most profitable. Then we look here at 5 to 6 weight steer prices. When you think about a 550 pound calf hitting 285 or so, I was talking with a producer recently, and they sold some 525s or so for 305 a pound in the past couple of weeks. So you're looking at $1,600 for calves coming straight off the cow. It's pretty stout value. And in this environment, if we have producers that are struggling in this environment, I don't know that there's a whole lot that we can do for them from an educational standpoint anyway, because there's a lot of revenue in this environment. And I'm not going to sit here and say that cattle prices are just going to continue to escalate. They're already strong, and at some point we should see some type of flattening. And the hope is that we see more of a flattening than some off the wall decline like we saw in late 2015 and into 16, when we had a really good year in 2014, and the first half of 2015 was pretty strong, and then things just collapsed. And a lot of that had to do with how quickly we rebuilt the herd. But at the same time, we would prefer to see some type of flattening in these prices and maintain strong prices for a longer period of time. I know nobody's going to complain from the selling standpoint if these calf prices keep on going up, but the buyers will complain. 7 to 8 weight steer prices. This is still weekly auction run average. You know, we've had several load lots of cattle sell 9 weights, you know, around 230 or so. So when we're selling 9 weight cattle for $2.30, a lot of those cattle from the stocker operator standpoint are making good money based off of when they bought those cattle. Because if you back up, they were buying those cattle in a large part around 240. If you buy a 5.5 weight at 240 and you're selling a 9 weight at 230, that is a really good opportunity to make money. Just quickly on the slaughter cow price, we're going to continue to see slaughter cow prices. They're going to remain strong because everybody is going to try to retain. When you have $2.80 to $3 steer prices coming straight off the cow, you're definitely going to have people that are going to hold back some of these older cows, even some of the lower producing cows, just to be able to get a calf off of them. Am I saying that's the correct management decision? Not necessarily, because I think there's some wisdom and some opportunity to be had to market some of those animals and capture a really, really good salvage value. You know, probably $1.20 is not out of reach here in the next few months. May even be higher than $1.20. So if you think about a 1,200-pound cow at $1.20, you know, $1,500 a head, pretty good salvage value out of that female. And it might be wise to just sell the mature female that's productive life is slowed and keep some of the younger females to breed. So this gets us thinking about the inventory that we're looking at. We would expect slaughter, as we've seen the strong cow slaughter the past 2 years, strong heifer slaughter the past 2 years. We know there's fewer cattle out there. And when there's fewer cattle out there, we know there's going to be a reduction in slaughter. And so you can see where heifer slaughter, steer slaughter, and beef cow slaughter are all down year to date so far. But none of these numbers say anything about expansion. The heifer slaughter will have to decline much, much more than 4%, just as well as beef cow slaughter is going to have to decline much more than 13% for us to see any type of significant retention of females to grow the beef cattle herd. But at the same time, we've only seen beef production down 4.2%, and we're starting to hold these cattle longer with fewer animals. We're going to grow them bigger in the feedlot. I go back to 2012 when I started this job, and might have done it better then than I do it now. I don't know, but we had finished cattle weights around 1,200 to 1,250 pounds on a live weight basis. Now most of our steers are somewhere between 1,400 and 1,450 on a live weight basis. And so we take fewer animals and we produce the same quantity of beef as we were producing in that time period. Pork production is up. The pork producers are struggling right now, though. Not a very profitable business as it is. I'm sure they hope that turns around. From the broiler production side, the poultry industry would like to expand production. The simple reason for that is when you have high beef prices or you have high alternative meat prices, they know that their meat price will follow that, even though it always will lag that. And in that, they know that they can, if they produce more product, they're okay with a really, really small margin as long as they've got a lot of quantity to sell. And small margins over a large quantity can add up to a lot of money. But the biggest problem that the broiler industry is facing right now is male fertility problems. And so just like our cows or humans or any other animal that might have some type of fertility problems, they've got some fertility problems in the male birds that are going into these houses, and they're all working diligently and hard to figure out what's causing that. So when they do figure that out, I would very much expect broiler production to turn around, and so that hatchability increases. They're setting a lot of eggs, but the hatch is not very high because of that fertility problem. And so when that does turn around, I would expect broiler production to increase. Just the basics of what I want to say on import and export is very basic. I don't want to get, you can see where the back half of last year we saw imports start to increase. There's no reason in showing 2024 because 1 month of data is really not very useful from that standpoint. But from the import side, when you produce less product and your domestic price of that product has increased, then you tend to import more beef or import more of that item. So in the case of beef, we've reduced production, we've increased retail price of beef, and so therefore we're going to import more beef. Well, primarily we're going to import more beef because we need the lean grinding beef to meet the demand for hamburger product. And there are sure to be articles written and people that spread propaganda on why are we importing so much beef and why are we not exporting more beef? Because if you see exports, they decline pretty significantly compared to the previous year in 2023. And in 2024, expect exports to be lower. And that's because we're not producing as much and our product is higher priced. So if why would other countries want to buy a higher priced product than what they've been previously paying for if they can get it somewhere else? I'm not saying they can get our quality of beef somewhere else, but we're just not going to have the product to export. And so when you read articles or listen to people and they talk about, oh, we need to be, we need to slow down imports and we need to export more. Well, just the fundamentals of it, the basics of it is that what is happening is what we would expect to happen. I mean, we're going to, I think it is, let me back up here. I mean, Japan and South Korea have always been good markets for us. China, who knows about China? They don't, I'm not even sure they know about themselves sometimes because they don't follow the same logic we do. But we'll continue to do business with these 4 major partners between Japan, South Korea, Canada, and Mexico. That makes sense. We'll import, excuse me, we'll import some of Aaron's Canadian beef. I know he can be proud of that. The thing is they produce the most similar product to us as they're the only country that really produces the same type of beef product that we do. And we tend to like the type of beef that we produce. So quickly getting into meat prices, I guess it's a good thing that the packer has been able to push wholesale beef prices a little higher. They're doing that more from a supply or a production standpoint than anything else, because we've really reduced a lot of that reduced heifer, steer, and cow slaughter is actually from just getting rid of Saturday slaughter. Because a lot of these places operate about 5.5 days a week, and when margins are really good, they'll operate a full 6 days, and from the packing standpoint. But when margins are not so good, they'll slow down their Saturday kills, and to some degree just wipe them out completely. And if we go back and I should have probably included one of that chart, but we've reduced Saturday kills to near nothing most weeks. And so it's more of a production standpoint. We've just slowed production. And as I said earlier, we're not going to be moving these cattle. We're going to grow them to heavier weights. Well, part of that is when the packer slows production, we just can't move as many alpha feed as quickly. So, but I think the cattle feeder is going to have incentive to hold those cattle longer as well. This is a reiteration of the same drought monitor that Aaron showed. I think it is very important to note that still a large portion of our state is struggling from drought issues. I hadn't looked at all the names of the folks that are on here this morning, but in Murray County and in most of this south central region of the state, the drought monitor is very well spot on. We had a dry fall, a dry late summer, a dry fall, and frankly, our winter has been fairly dry. Aaron asked before the meeting started what it was like here, and it's kind of drizzly, dreary, but the 2 days of that has not accounted to much moisture. Maybe 3/4 of an inch to an inch. I'd have to go check the gauge, but overall, from December through February, we have not had that much rain, and so that presents a few problems for subsoil type moisture that we really count on in the spring. But you look up into Missouri, Iowa, Minnesota, Wisconsin, the North Dakota, you look into Kansas and Nebraska, and there's a lot of cattle in those places. A lot of cattle. You look up into the Northwest or down into the Southwest, a lot of cattle in those areas, and they're all being impacted by this drought. If it persists, we could continue to see a lower cattle herd in those regions, smaller cattle herd. I do think that people will try to start growing the beef cattle herd at some point in the near future, but it's going to be climate dependent, and so we'll see how the good Lord blesses us on that. Hay stocks are fairly low from a relatively speaking. I mean, compared to last year, December 1 hay stocks are stronger than they were a year ago, but they're still relatively low. We did have a fair hay production year in 2023, but we're really going to need another good hay production year in 2024 to be able to really grow some stocks that we need. Aaron's already talked about corn prices declining, so you would think that feed prices have declined. They have to some degree, but not to the degree that I would expect them to, especially if you think about, most of the time we just think about it from the feedlot perspective, but when you think about it, if you're buying some commodity blended feed from your local feed supplier, I have a feeling you have not seen the decline in feed prices. I don't think it's been a very strong positive correlation with the decline that corn prices have seen. Here's some key numbers. The number of cattle on feed remain very, very high. Pretty strong values. Of course, a lot of that was precipitated from not having precipitation in 2023. So we pushed a lot of females into the feedlot, and right here is where that really shows up when you see that we nearly had 40% of the cattle on feed were heifers. We need to see that number probably dip down back to 34 or 30, somewhere between, we'll just call it 34%. Before that really tells us that, hey, we're retaining heifers to regrow the beef cow herd. I hope we don't have a lot of people that keep a bunch of sorry heifers like we did in 2014 and 15. That would, I think a lot of people, I'm hoping a lot of people learn their lesson that it doesn't pay to keep sorry heifers to produce calves, because you end up with sorry calves. But if they don't, they may still, I mean, it may end up being better for them than what I think. But we've put a lot of cattle on, a lot of these heifers on feed. This is just to strictly show you that it's still been expensive to feed cattle. The actual January data just came out earlier. Wait, let's see. Today is Wednesday. I think it came out on Monday, and it's still around $1.20 for animals that coming off of feed in Kansas. So $1.20 is still pretty expensive, relatively speaking. Here's our inventory report. Lowest cattle inventory since 1951 for total cattle inventory. lowest beef cow inventory since 1961. And if we only have 28.2 million head of beef cows, then it's pretty easy. If you take 90% of that as the calf crop, that would be about the max number of calves that we're going to produce in 2024. So we're going to see a smaller calf crop, and smaller calf crop should mean strong support for cattle prices moving forward, at least in the next 2 to 3 years. Heifers held as beef cow replacements continues to decline. I do think that will start to pick up in 2024. I guess that's why I bought several heifers to breed, and I'm currently breeding several heifers, because I guess I'm hoping that folks will be looking for those females this year. If they don't, I guess I'll just get burned from that decision. But I do think people will start to look for those animals just because of how strong calf prices are. Tennessee at 835,000 beef cows. I think the real story is the change across the regions, and it very much is in line with where the drought primarily was. Right now, parts of Texas are suffering from those wildfires. Definitely going to influence grazing ability for a few weeks or a few months. Now, how many animals did it actually kill or cause some issues? I think it has more to do with burning up range land that would have been used for grazing, and maybe even getting into hay supplies and burning hay supplies, that type of thing. I think that's probably the bigger concern there than animals, because they do have 4 legs and can move. But kind of where we're looking there. Now, here's April feeder cattle futures. Just like Aaron showed some of the futures market, we're just the opposite of corn and soybeans. Cattle prices have just been escalating, and you can look where we were already at this level for April back in October, but still a very, very strong market here. I do think that some people need to be considering some price risk management opportunities. The way to approach price risk management in livestock is not the same as row crops, because the production cycles are a little different. But the main thing I think of is when the futures market will offer you a profitable price on a group of cattle. I think it's at that point it is advantageous to consider some alternatives and how to manage that risk. But you do have to have some back of the feed sack math to know what price point will produce that profit. And for most people, the current futures market price would offer a profit. Let's skip ahead to August, which we're looking at nearly 270 yesterday. We've been playing around 270 for a while. The market the August feeder cattle futures contract actually was above 280 at one point back in September. So we're still $10 off the high, but when you think about it, about $2.70 on an 8 weight, let's see, $2.50 would be $2,000. So that'd be $2,160 per head. Take off our basis, you're still looking at over $2,100, probably $2,120 or so per head on an 8 weight. That is pretty stinking good money, especially given that we back up and we say we're buying a 5 weight. If you're a cow calf guy and your background, that's really good. But if you're a stocker operator and you're buying these cattle for $1,500, well, you still got $600+ to put on 300 pounds. So that's where I say I think there's some positive margin there for those stocker producers. I do think that the fed cattle price could eclipse $2 at some point this year. I'm not going to say it will for sure, but I do think that's a possibility. Here's the quick look at what I think prices are going to do for different weight classes of cattle the next few months. You can take a quick look at that, and the last thing I do want to just, I don't know if I've mentioned the UT Livestock. It's an app. So for those of you who use smartphones, which most people do nowadays, we generated, or we received a grant a couple of years ago to do some price risk management work, and in that grant we've developed an app. It's just called UT Livestock, so if it's free to whoever wants to use it. But we created it because we kind of wanted a one-stop shop, so you could look at the futures market, you could look at LRP offerings, and you could look at actual auction prices all on one app, as opposed to having to flip back from this app to that app to some other app. And I think the LRP side of this, the livestock risk protection insurance side of this, is the most beneficial thing, because if you go to the website for LRP, it just is kind of information overload. And the way we filter things, LRP, you reduce that overload using this app. There's also a website, utlivestock.com. So you can go to utlivestock.com and see all this, or you can go to the App Store and purchase them. So or not purchase them, they're free. I'm sorry, but you can go to the App Store and download that for free. So with that, I'll open it up for questions.